Hello everyone. This is the pre-market report video for today, 14th June 2024 for the Indian stock market in terms of Nifty and Bank Nifty. First, quickly let's look at the US market. If required, please pause and have a look. These are the list of market defining macros that was released before their market opening. The top two are the job insurance data and the bottom two are the wholesale inflation for May month. We already discussed in detail in the last video about the consumer inflation data, which was very good, and the Fed chairman in his press conference, he lauded about the low inflation number for at least 20 times. Hence, that was also one of the very important reason why US market on Wednesday night closed all-time high. On top of that, last night, the number of new US people filing for jobless insurance last week hit a 10-month high value. I mean, for the week ending June 8, compared to its previous week, it increased by 13,000 to 2,42,000, which is higher than the expected 2,25,000. As I said, this is the highest number of new weekly claims since August 2023. In addition, the overall number of people claims increased to 1.82 million. Again, that also increased more than what analysts expected and also more than the last week. Basically, what this two data indicating is labor market is not good as it was a month ago. It started to soften, which is exactly market wants. So it forces the Fed to cut the interest rate. Similarly, the wholesale inflation data PPI on month over month it haven't increased at all, and on yearly basis it increased 2.3%. So clearly in both metrics the actual data is lower than what analysts expected and much lower than the April month data. Again, this is also what exactly market wanted. Now because of this, Fed rate monitoring tool increased its probability of chance for the rate cut in September month for over 70%, which was on Wednesday night around 60% and Tuesday night below 50%. I mean, in 2 days, this low consumer and wholesale inflation data and the poor jobs data increased the interest rate cut chance to near 70% from below 50%. So, on this expectation of interest rate cut, for the fourth session in a row, both Nasdaq and S&P 500 closed fresh all-time high. However, now this raises the demand and mild recession concern in US. So, the oil price, oil stocks, and manufacturing related stocks got impacted negatively. Hence, second day in a row, Dow Jones alone closed negative 0.17%, whereas S&P 500 increased 0.23% and Nasdaq increased 0.33%. In case of VIX, from above 12, it moved down to below 12. Regarding oil, at the time of this video, WTI crude trading at 78 US dollars per barrel, whereas Brent crude trading around 82 US dollars per barrel. Then coming to Indian ADR, though Nasdaq was positive, Indian ADRs was under pressure, especially ICICI Bank, which was down over 1.5%, almost double the time negative than the Indian market. Regarding the reason, there might be two. One, yesterday they made the announcement that from July 1 onwards, they scrapped lot of service charges like no charge for charge slip request, no fee for duplicate bank statement, and no fee for replacement cards, etc. and much more. They said they are doing it to attract more customers, which will be possible future benefits, but the problem is impact of those in the total profit is still unknown. And the second possible reason might be yesterday mutual fund research group called ACEMF released the compiled mutual fund report. In that, both HDFC Bank and ICICI Bank were the two Indian listed company holding by most number of mutual funds like 588 number, which is good. But the problem is in some mutual fund they reduced the ICICI Bank holding weightage, whereas increased the HDFC Bank one. So those are the two possible reasons I can able to find yesterday. If I missed any, please let me know in the comment section. I mean, usually demand supply price action without news influence will be less than 1%, typically 0.5%. Here in ICICI Bank ADR case, it was over 1.5%. So clearly there is something influencing. Anyway, moving on, both Infosys and HDFC Bank closed flat to negative. Just for info, before the election results day, I saw some article in Money Control in which they mentioned, as per Macquarie Capital, in the August month MSCI index rebalancing, they predicted HDFC Bank expects to receive over 5 billion US dollars worth of fund. I mean, they explained all the logic and MSCI index calculation framework, like why they think HDFC Bank weightage in MSCI index is going to be double kind of, which I was convinced. So I took a gamble on June 4th and bought the 25th July call option for 61 rupees. So now I want HDFC Bank to increase as much as possible in the next 2 weeks so I can square off with some handsome profit. Just a disclaimer, this is not a recommendation. Please don't make any decision based on this. I'm just explaining what's my open position. Then you might ask why I'm telling this. There are two reasons for that. This is a one way which we can use macro and microeconomic details of the stock to take up the position. And the second reason, for the past 1 week, I want to tell this, but all those time there was too much of data and too much of things were happening. Hence, almost every day, in order to reduce the video length, I skip some information. But today, there is not much information, so adding it. Anyway, back to pre-market stuff. Wipro Edior alone closed positive as they announced the collaboration with HP to launch the generative AI solution. As usual, any company with the buzzword AI, market is immediately rewarding them. Then about Gift Nifty, today early morning it closed at 23,420. Here, yesterday at the time of closing, there was no premium between Gift Nifty and Spot Nifty. There are 14 more trading sessions for this expiry, so no premium means which will be a clear negative momentum indication. Anyway, for today, it's indicating flat to positive opening. Other than that, again, FII turned as mega net sellers. Yesterday, they net sold for over 3,000 crore rupees, whereas DII also net sold for 550 crore rupees. So totally both the institution together sold for 3,550 crore rupees, but still yesterday Indian market closed positive, not sure who is buying. As a summary, US market closed positive and the global momentum is improved, but both Indian ADR and Gift Nifty indicating the flat opening. Moving on, yesterday as per stock open interest, Marico, Punjab National Bank, Canara Bank, ZTV and Laurus Lab got an increased open interest along with a negative close indicates the short build-up. On the other hand, BEL, Motherson, ICICI Prudential, Birla Soft and Adani Enterprise got an increased open interest with a positive price close indicating the long build-up. About the things to look out, early morning today before our market opening around 8:30 am, Bank of Japan's interest rate decision. During our market time around 12 pm, India's wholesale inflation data are scheduled to release. Then in the aftermarket hours at 3:30 pm, India's trade data is scheduled to release. And for US market in the night, their consumer sentiment data and their industrial production growth for February month are some of the important items we need to keep an eye out today. Coming to technical, Nifty opened 130 points gap up at its record high level. Then it was range bound throughout the session and finally closed around 23,400. Thus, on the daily chart, Nifty formed a bearish candle with minor lower shadow, and on the hourly chart, there was a bearish divergence, which all indicates the loss of positive momentum. Additionally, as we see in the candles, Nifty was in sideways and has been consistently flat for the last 4 days, indicating a pause before a sharp move. But which direction? So far, no indication on either side. A decisive move above 23,500 will take the Nifty higher towards 23,800. On the lower end, the support is placed at 23,300, below which Nifty might weaken further. In case of Bank Nifty, it opened 260 points gap up by crossing 50,000 and touched the day high at 50,186. However, again another day it closed almost flat below 50,000 mark. Thus, on the daily chart, similar to Nifty, Bank Nifty also formed a bearish candlestick pattern with lower shadow. Hence, for the momentum to continue, Bank Nifty needs to decisively break above 50,200. Until then, it's likely to trade range bound with support at 49,500 and resistance at 50,200. On the options front, the maximum call option open interest was at 24,000 strike, followed by 23,400 and 23,500, with maximum new call option writing at 23,400 strike, then 24,500 and 24,000. Whereas on the put side, the maximum open interest was at 22,500 strike, followed by 23,400 and 23,000, with maximum new put option writing at 23,400 and then 22,000 and 22,500. Thus, from options data, it's indicated Nifty's resistance is at 24,000 with support at 22,500. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.